Hello and welcome. You're watching Money Time at Money9, where you get all the personal finance news that matters to your pocket and your life. Let's begin with the third-party insurance. The Ministry of Road Transport has increased the third-party motor insurance premium by 22 rupees for private cars with an engine capacity of 1000 cc, while the insurance premium of vehicles having engine capacity between 1000 cc and 1500 cc have been increased by 195 rupees or 6%. Two-wheelers over 150cc but not exceeding 350cc will attract a premium of 1366 rupees, and for two-wheelers over 350cc the revised premium will be 2804 rupees. The third-party insurance cover is for other than own damage and is mandatory along with the own damage cover that a vehicle owner has to purchase. This insurance cover is for any collateral damage to a third party, generally a human being, caused due to a road accident. According to the ministry's notification, owners of hybrid electric vehicles will also get a discount of 7.5% on the premiums. Up next, packed food to continue to get costlier. The manufacturers of packed food items in India have said that the recent steps taken by the government of India to combat the rising malice of inflation are of no help. They will further hike prices of their items in the coming days. The country's largest biscuit manufacturer, Parle Products, has said that packaging cost of its products and carton prices in which they transport their items have increased by 20 to 40% in the last 6 months. Salty snacks maker Cornitos has said that the government has not taken any measure to reduce packaging costs and carton prices, as a result of which will have to continue to either increase prices or reduce weight of their products. Dairy firm Amul has said that the recent export restrictions imposed by the government on various items will not reduce prices unless and until the government helps the manufacturers in reducing the packaging and transportation cost of the goods. Up next, we move on to the world of smartphones. Smartphones have become costlier by 27% since COVID-19 began, says International Data Corporation. According to IDC data, the average price of smartphones has increased by 27% since the pandemic began in March 2020. Smartphones had never been this costly in the country before. According to Navkendra Singh, research director at IDC India, smartphone prices have increased by record margins because prices of components used in cell phones have skyrocketed. Various factories where components are manufactured had to be shut down to counter COVID-19 cases. In addition to that, recently, various factories in China were again shut down to stymie fresh cases of Omicron variant of COVID-19 cases and percolate, adding fresh woes to the manufacturers. To rub salt into the injury, Navkendra has said that he expects smartphone prices to further increase for the next few quarters in the country. Up next, it's all about electric cycles. Delhi government is giving a discount of up to 7,500 rupees on electric cycles. Delhi government is giving discount of 25% on purchase of electric cycles, but the citizens can only avail of a maximum discount of 5,500 rupees on one e-cycle, although first 1000 buyers will get a discount of 7,500 rupees. In addition to that, the buyer will not get the discount when he buys the e-cycle. The Delhi government will credit the amount to the Aadhaar-linked bank account of the buyer within 7 working days after he had purchased the e-cycle. The buyer must have an Aadhaar card, otherwise he is not eligible to avail the discounts. From electric cycles, we move on to electric vehicles. Book first electric vehicle of Kia India at 3 lakh rupees. Kia India on Thursday said it has commenced bookings for EV6, its first electric model in the country, but only 100 units of EV6 would be available for sales in India this year. The EV6 can be booked with a token amount of 3 lakh rupees through the Kia India website. On a single full charge, the car can travel up to 528 kilometers. Not only this, the vehicle can be charged from 10% to 80% in as little as 18 minutes. Up next, we are going to real estate. Property prices may reduce due to steel duty cut. Real estate developers in the National Capital Region have said the central government's move to ease prices of raw materials will provide a significant relief to builders as well as home buyers. Raw material prices had risen by up to 45% in recent times. This had forced the developers to increase prices of real estate units in the country. Realtors body Credi's Western UP President Amit Modi has said that the property prices have risen by 6 to 8%. Along with hike in home loan interest rates, it was making a dent in the budget of the buyers, especially those looking for affordable housing. Gulshan Homes Director Deepak Kapoor said recent steps by the government will help developers reduce prices of both luxury segment and affordable housing. Up next, we move on to mutual funds. Flexi-cap mutual funds favorites of investors, says Association of Mutual Funds. Association of Mutual Funds in India have said that people have invested the most in Flexi-cap mutual funds in FY22. Flexi-cap mutual funds are required to invest a minimum of 65% on investors' money in equities. According to AMFI, investors have invested the highest in Flexi-cap funds, then in mid-caps, followed by large caps and the least in small caps. And we wrap up today's Money Time with some news from NBFC. Licenses of 5 NBFCs have been cancelled. If you had applied for loan with any of these 5 NBFCs, then you must inquire about the financial services that you were availing from any of these. The Reserve Bank of India (RBI) has cancelled registration of 5 NBFCs for violation of norms. These are UMB Securities Limited, Anashri Finvest, Chadha Finance, Alexi Tracon and Juria Financial Services. The Apex Bank has said that these 5 NBFCs were offering digital loans through third-party apps, which was detrimental to public interest. That's all for today on Money Time at Money9. For more such news like this, subscribe and stay tuned to Money9 English's YouTube channel. Do follow us on Twitter, Facebook and on Instagram.